Chamath Palihapitiya, the CEO of Social Capital, is definitely one of the greatest investors of our age. Over the past decade, he has made numerous successful investments, including early investments into Amazon, Tesla, Slack, Facebook, and Bitcoin. Most recently, he has stated that he believes he has found the next stock that has potential to 10x within 5 years. In fact, he even stated that this company will become the next Amazon and Tesla of its space. In addition to Chamath, another famous investor, Ron Barron, also invested in this stock. Some of you may know Ron Barron as an early investor in Tesla. However, he has also successfully invested into many other companies while managing his fund Barron Partners. In the past 25 years, Ron has averaged a return of 13% per year, and that's not including 2020, where he returned over 100% in his flagship fund. In this video, I will cover what this company is and whether the stock is a buy today. Welcome to Casgains Academy. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. Before we start, I just wanted to thank all of you for getting the channel to 100,000 subscribers. As a celebration, I recently opened up a free Discord server for all of us to talk about stocks, EVs, and more. The server has many advanced features such as a stock bot that has hundreds of commands. The link will be in the description below and in a pinned comment. Just to be clear, it's totally free to join, so I look forward to seeing you there. Now you guys know that I won't wait until the end of the video to tell you the stock I'm talking about. The stock that Chamath and Ron believe has plenty of upside over the long term is SoFi, which stands for Social Finance. SoFi is a technology company that is disrupting the massive industry of banking and is merging via SPAC under the ticker symbol IPOE. SoFi looks to disrupt many parts of the financial services industry, and the company claims to have a $2 trillion market cap opportunity. To be disrupting such a large industry is not something to overlook. This video will focus on what SoFi offers and why Chamath and Ron both believe that SoFi has a lot of potential as a long-term investment. First, we'll start off with an overview of what SoFi is and how it is disrupting banking. Then, we will cover SoFi's growth loop and its path to 10x. After that, SoFi's CEO and his leadership, and lastly, SoFi's valuation and whether it is a buy today. With that being said, let's get right into it. In 2011, SoFi was founded by 4 Stanford University graduates who had a vision of disrupting the student loan industry. Today, in 2021, the company has expanded rapidly into many industries and has become one of the leaders in the digital banking revolution. This is highlighted with investors like Cathie Wood from ARK Invest, who sees big banks getting their market share taken from them very soon. As many of us know already, Square's Cash App, PayPal's Venmo, and Bitcoin allow users to send their money without having to go to the bank. This convenience brings the concept of low advertising costs because their services can travel easily through word of mouth, rather than traditional advertising. In turn, this enables the services to allocate less money to advertising spending and instead focus on providing a better and cheaper service. What SoFi does is they take this mindset of an online financial world and bring it to the banking space. Cash App and Venmo are great for the democratization of money, but at the end of the day, they still can't replace normal checking and savings accounts. This is where SoFi comes into play. SoFi is a neobank, which means that the company doesn't have to pay for the large infrastructure and maintenance costs that banks have to constantly pay for. One of the major advantages of SoFi is that the company doesn't have to set up physical bank branches. Setting up physical bank branches costs a lot of money because you need to be located conveniently and located everywhere in order for people to feel comfortable using your services. This doesn't even include the ATMs, bank tellers, and security infrastructure. SoFi doesn't have any of this, which brings back the idea of being able to focus on providing a better service. The company plans to cover literally everything that is offered in the banking world and will become a one-stop shop for all of your financial needs. SoFi puts its products into 5 different categories: borrow, invest, spend, protect, and for business. With borrowing, consumers are able to get access to multiple types of loans, including student, personal, and home loans. These aren't issued or refinanced by them, but rather through a third party that specializes in such work. For SoFi Invest, users are able to trade stocks, ETFs, and crypto directly on their platform. However, something that caught my eye in this category was that they have even more available options. Users can employ a SoFi robo-advisor to manage their IRA accounts. Additionally, SoFi has their own unique ETFs that are only available on their platform. Currently, the company has 5 different SoFi ETFs. SoFi has TGIF, which focuses on high-income yielding securities and gives investors a weekly dividend every Friday. Another one is GIGE, which focuses on high-growth tech companies. Since its inception on May 8, 2019, GIGE has returned over 83%. SFY follows the S&P 500 with the 500 largest publicly traded US companies, and SFYX invests in the top 500 mid-cap companies. More interesting, however, is SFYF, which is a fund that invests in the top 50 companies held by users in SoFi Invest. This is certainly an interesting concept. By tracking the top 50 most held stocks, this fund will be able to follow the herd of the stock market. Personally, I wouldn't invest into that, but let me know what you think. SoFi offers a branded credit or debit card that has various forms of cashback, credit score monitoring, and money tracking. The SoFi credit card gives a 2% cashback for money spent on its other services and 1% cashback on all items. For the Protect portion, SoFi allows you to purchase insurance policies offered by third parties. This includes homeowner and rent insurance provided by Lemonade Insurance and auto insurance provided by Root. For the business portion, SoFi brings various forms of financial literacy that will provide valuable advice for people not experienced in finances, like college students. Additionally, SoFi also offers small business financing, including PPP loans, SBA loans, term loans, and personal loans. Essentially, we can see that SoFi's management wants to integrate every financial service on their platform, so users won't need to use any other platforms. Chamath describes this as a one-stop shop solution.
Have you been targeting fintech for a while? How did this come together?
Yeah, a lot of the things that I do is try to look back at some of the best investments we've made, like Amazon and Tesla, and try to find patterns. And in this, what I was trying to do was map those patterns into financial services, just because we're at a point in time where it's clear that the banking infrastructure really isn't meeting the needs of US consumers. And so what I did was just kind of systematically try to figure out what was broken in banking, and then try to figure out which company was best representative of the solution that people wanted, which I can basically tell you is 3 things. People want low to no fees, they want fair and transparent lending, and they want a full suite of products so that you can basically have a one-stop shop. And SoFi basically was the top of the list when I looked across all the companies on those dimensions.
We went over what SoFi is, but what actually differentiates SoFi from others is a different story. SoFi sees its competitive advantage being its fast services, broad selection of services, content, and convenience. What SoFi recently added in this list is its social network. Here on YouTube, we can all discuss with each other our thoughts about investing. SoFi looks to enter this space through its recently added social investing features. These features include the ability to see what other SoFi members are investing in, see new investment ideas, and see how users perform in comparison with others. There is some potential in disrupting the investment social network. Nevertheless, the most special part about SoFi is its growth loop. SoFi describes its growth loop as a financial services productivity loop. Essentially, how this works is that SoFi builds trust with the customer on one product, which drives that customer to use SoFi's other services. By doing this, SoFi can lower its customer acquisition costs. The reason why that is important is because SoFi can spend more money in marketing than its competitors, since the cost to acquire a customer is lower. As we've seen with other online companies, the winner of their respective sector easily takes the most market share. Similar to other companies like Amazon, Spotify, Facebook, Airbnb, and many more, SoFi's lead in the fintech space will allow it to take the majority of the market share. According to SoFi's research, 80% of consumers use multiple banks because none of the banks are adequate one-stop shops. SoFi looks to change this, as the company is the only company with all of the banking services in one app. Because of its unique approach, SoFi is quickly becoming a dominant player in the fintech industry. In fact, in 2021, SoFi expects its members to exceed 3 million users, which is a growth rate of 75% year over year. As I talked about earlier, the fact that SoFi has multiple products means that its revenue growth can accelerate from customers using all of SoFi's products. In 2021, SoFi is expected to have its multi-product members increase 95% year over year. This multi-product usage leads to a greater lifetime value for each customer, which directly translates to more profits for SoFi. In fact, 24% of SoFi's product sales comes from existing members trying SoFi's other services. In the third quarter of 2020, over 65% of home loans came from existing members. The existing members that tried the home loan service were acquired through only $1 million of marketing and drove $30 million in revenue. SoFi also recently acquired a payment services company named Galileo for $1.2 billion. Galileo allows companies to easily create bank accounts and issue physical and virtual credit cards. One company that you might be familiar with that uses Galileo is Robinhood. SoFi looks to use its existing products to merge them with Galileo and become the provider of bank accounts, loans, stocks, and virtual credit cards to all the fintech companies. This is similar to Amazon Web Services, as AWS provides the platform for many websites you use today, which brings in huge amounts of profits. Additionally, Galileo itself has been accelerating in growth. In the third quarter of 2020, Galileo had its total account number at 50 million accounts due to the rise of online payments in 2020. Because of its multi-product moat, SoFi is expected to have its revenue grow extremely fast from 2020 to 2025. By 2025, SoFi expects to have its revenue at $3.6 billion. Additionally, SoFi also expects to have its EBITDA, or earnings before tax and depreciation, at $1.1 billion by 2025. All of SoFi's products are in different maturity stages, as its lending program is already profitable at a 58% margin and its technology platform Galileo has a 625% margin. On the other hand, SoFi's financial services platform is expected to grow extremely fast from 2020 to 2025 and is on its way to profitability. Usually, fintech startups have to pay others to insure their money, because those fintech startups aren't actual banks insured by the federal government. SoFi recently got its preliminary approval to become an actual bank, which means that SoFi doesn't have to pay other banks to insure its money. As you can see in this graph, SoFi becoming an actual bank will improve margins significantly by lowering its cost of capital. This will accelerate profitability for SoFi and save extra money for marketing expenses. Now that we can clearly see SoFi's branding and pricing power, let's take a look at SoFi's leadership to analyze whether SoFi's CEO is an Elon Musk, Jeff Bezos, or Jack Dorsey type of person. One of the most important factors when examining a business and whether it is a potential investment is when you look at the leadership of the company. Without Elon Musk and Jeff Bezos, Tesla and Amazon would be nowhere near where they are today. The CEO of SoFi is Anthony Noto, who is formerly in big leadership positions in the NFL and Twitter. After talking with Anthony, Chamath has come to the conclusion that Anthony is someone who can drive the growth of SoFi.
Look, I think you're seeing, even through the events of the last 24 hours, leadership and character really matter, because you are faced with incredibly difficult decisions of policy, of morality, all kinds of things. Here's what I can tell you just personally about Anthony. He has lived an incredibly hard life to get to where he has. And I have tremendous empathy for that because I've lived a similar path. And so I just have deep respect for the man that he is and the character that he has. But then, practically speaking, in his career, he is just completely money in the bank. I mean, the former CFO of the NFL, the former CFO of Twitter, the former COO of Twitter, an incredible banker, a great research analyst, and just a wonderful human being. So this is sort of a what you see is what you get kind of guy who really believes in, advancing financial services for, middle America, for normal folks to be able to sort of get ahead. And I just think that that's a person you want to see win. And then as a result, the company that he's built is just really special.
We must take a deep look into its valuation and whether the stock is a buy today. As I mentioned earlier, SoFi will be merging with Chamath Palihapitiya's SPAC, which is under the ticker symbol IPOE. At $10 a share, SoFi is valued at $8.7 billion. At the time I'm recording this video, IPOE is valued at $19 a share, so this would be a market cap of roughly $16.5 billion. In order to see whether SoFi is undervalued or overvalued, we're going to use 4 metrics, which are the 2024 and 2025 expected PDE ratio and the 2020 and 2021 price to sales ratio. In 2020, SoFi expects to lose $220 million and have a revenue of $621 million. This would value SoFi at a price to sales ratio of 26. This is quite high, but given that margins are expected to increase substantially once consumers try SoFi's multi-product offering, it isn't accurate to compare this company to a company like Square, which has a price to sales ratio of 14. SoFi's expected price to sales ratio in 2021 is 16, which is much closer to Square's current price to sales ratio. SoFi's 2024 PDE ratio, which is essentially what the PDE ratio in 2024 would be if SoFi's share price stayed the same, is 41, which is actually quite low for a growth company. SoFi's 2025 PDE ratio is 26, but keep in mind that these PDE ratios are deflated because they were based off of SoFi's numbers before getting a bank charter, which the company has already gotten preliminary approval to. Now I don't complicate these numbers, so I'll add in that SoFi's 2025 price to sales ratio is 4.5. If SoFi is valued at a price to sales ratio of 15 in 2025, this would mean that in a 5-year span, SoFi has a clear path to 3x from its current valuations by my calculations. Now this shouldn't be taken as financial advice, but SoFi to me looks like an enticing long-term investment. If you're wondering when to hypothetically buy in, I would say that the best strategy is the dollar cost average. But again, always do your own research. So there you have it, Chamath Palihapitiya's brand new SPAC, SoFi. Chamath's worldview is to democratize aspects of society that are not well versed in the everyday person. With this, he invests in technological, easy to access and easy to understand platforms that he believes are leaders in this digital revolution. We can certainly see this with SoFi in the banking sector, but also with some of his other SPACs, such as Opendoor in real estate and Clover Health in the healthcare sector. With such a mindset, there's a lot of risk because this hasn't been done before, but there is room for massive potential. Like we saw with smartphones, streaming, and the upcoming EV revolution, banks will either have to adapt to the changing society or die off. What are your thoughts on SoFi? And do you think it is an enticing investment? If you're interested in seeing my full portfolio with explanations for each position or buy and sell alerts, check out my Patreon in the description below. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.